Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about STEM's Q1 2022 financial results. So keep in mind that this was aired today, May 5th, and it is a Thursday. The reason why I want to talk about STEM today is because we are going to be covering, or have been covering, their earnings for just over a year now, and the company continues to perform very, very well. The way that I'm going to describe my opinion over the 2022 results today are cautiously optimistic. So something that I will do is I will link this presentation in the description down below. Feel free to leave a like and subscribe on the channel if you are a firm follower of STEM and you are wanting more information. So the first thing I'll highlight is this stuff in this presentation is from the STEM website, and I am just going through this and providing my opinion. I'm definitely not a financial advisor. So what I want to focus on as we're kind of reviewing this is there is a lot to really like about the information that is showcased here. The first thing that, as we're looking at the revenue for $41 million, is 166% year over year increase. And this is actually higher, about 30% higher than the high end of the guidance range that they provided. Keep in mind that Q4 earnings was described as a big miss because they had some large projects that were pushed into this calendar year. And I believe that those big projects are what helped to have a very strong first quarter. However, there are other things that point to having strong growth in the first quarter, and that was going to be this bookings right here of 151 million. So the 151 million that you see right here, this is clients that are going under contract saying that they are going to purchase the services that STEM is going to offer them. So this is essentially new sales where the client has already signed a contract. That brings them up to $565 million of total backlog. And this is a huge deal because this covers the entirety of 2022 revenue as well as goes into next year. And it is very, very strong. I'd also highlight that from a GAAP perspective right here, we have 9% gross margins, which is a big uptick over what we saw this past quarter. And I would highlight that this is what we want to continue to see as this number grow. What we've been looking for is for also energy to continue to integrate into the platform. They have a lot of the software components from the ongoing revenue perspective. So the more of those that there are, the less installations means the better margins that we're going to see. And I expect to see that overall percentage continue to grow over the course of this calendar year. So something else that they've started pushing out is this contracted annual recurring revenue. This is a lot like what we like to see in the SaaS space, software as a service. So I expect us to continue to see this recurring revenue component down here below. And right now we're looking at just over 50 million in total contracted revenue. So overall, there is a lot to like. Some of the things that I will personally call out is that their 1Q revenue was above high-end guidance. That gives them the capability to have some breathing room as they go into the year-end results. Keep in mind as we kind of go down here below, and I'm going to kind of scroll through this a few different ways. Keep in mind that Q4 is going to continue to be the large end of their expected revenue. That is just seasonality and when they expect to deliver on it. So we're still going to be looking to see, can they continue to perform? However, this was the second largest revenue month that STEM has had behind Q4 of last year. So they're continuing to grow, and I would expect these targets for Q2 and Q3 should be very manageable going forward. The question is, are they going to be able to perform for that Q4? This is going to be some large deals that make this up. Keep in mind, during the last earnings call, they were calling out specifically that they were going to be targeting larger high dollar deals that would lead to greater recurring revenue coming from those software components. So that's what we're going to be watching with their Athena auto bidder. So all in all, again, I'm going to highlight some of the key things that I think continue to be very high performance. Overall, Athena seems to continue to be a market leader. I'm seeing continued emphasis that it is a strong program, and I'd like to see someday the capability to demo the software and see how it works, but I recognize that due to additional confidentiality agreements as well as the capabilities, of the overall market performance that we're probably not going to see something like that. So as far as the storage supply, they did talk quite a bit about some of the market demands, and you're seeing continued growth on behind the meter, especially in the solar performance, but they also are doing a lot of front of the meter. Keep in mind that a year and a half ago, they thought that they would nearly be entirely behind the meter, and we're doing significantly more front of the meter type of opportunities at this point in time. They also have already locked down their supply chain for this calendar year, and they reiterated that they felt comfortable with supply and what they were delivering to their clients multiple times on their earnings call. Something else that I would also highlight is that they continue to outperform in terms of growth, and they're maintaining their current 2022 revenue plan. So they're continuing to grow, and we're big fans associated with the execution from the platform. Something that I would highlight as we're looking at the financial metrics is last year they did have that negative gross margin that was largely due to the way that revenue was coming in. So we're starting to see that increase in revenue combined with also energy, again, especially because also energy has a lot of that software coming through, which is going to be causing that gross margin to continue to increase. So this is what is ultimately going to lead on that path to profitability. But I would highlight that when we're looking at these adjusted EBITDA margins, that we are seeing an increase in losses, and we can see that down below. The nice thing is that we see a massive increase in the contracted backlog, but we're still continuing to deliver more every single quarter. And then you can see that contracted continued growth or contracted revenue continuing to grow as well. So they continue to reaffirm that full year guidance, but we still expect to see the end of this year with a adjusted EBITDA of between negative 60 million and negative 20 million. The hope is that next year, 2023, we will continue to see growth, but we would also expect to see an increase in profitability, with 2023 still slated to be the first year that the company will be profitable. So you can see the plan and how they plan on getting there right here with the main focus, and this is an identical slide to what we saw in the Q1 presentation, but the focus or the goal here would be that this is going to lead to profitability in 2023. So I'll leave the key takeaways up here on the screen, but what I want to highlight and the reason why I'm cautiously optimistic is I don't necessarily take everything that the company has said at full value due to the fact that they did somewhat mislead investors for the Q4 revenue, where they had multiple times to walk it back. However, they did have a large miss. I'd like to see them continue to perform for Q2 and Q3, and then I will reaffirm my opinion. Again, I'm still very long on STEM, but I do want to see that they're capable of delivering on those larger projects and that they can have a clear path to profitability. They still have plenty of cash on the books. I'll scroll down to some of the financials that they've got down here below. But they've got plenty of cash on the books. Revenue continues to grow. But again, they are going to continue to see a decline in cash flow as they continue to drop those. So this is what I'm looking for. So you can see that they continue to have that net loss down there below, and that's going to contribute to cash burn. They've got plenty on the books right now. They've got a low cost of debt service coverage, and the company is looking very strong from a performance perspective. There's still a lot of ifs, ands, and buts about the general approach of the market, as well as how clean energy is going to perform. We saw very ugly earnings from Sunrun, but there is a lot of positive mentality and positive momentum behind STEM, and I'm excited to continue to watch the company to grow. They're executing according to plan. As such, I'm going to continue to purchase because I continue to believe that this stock has quite a bit of potential going into 2023, and in particular, I'm going to stand by my original investing timeline of 2025. If you have any questions, feel free to drop them in the comment section down below, and we do have a channel in the Discord which is free to join, and that is linked down below, and it's something that we'll be watching going forward. So let me know in the comments down below if you have any questions, and if you found this content helpful, please leave a like and subscribe. Thanks. Talk to you later.